Good morning, good afternoon, good evening, depending on where you are in the world. Thank you so much for tuning in to another session of what I like to call Mind Over Markets. This is your bi-weekly dose of performance coaching. In these sessions, we take a little bit of time to usually get away from the charts. We get away from the markets. And these sessions are more so about understanding yourself, understanding why you react, think, and feel the way that you do on a day-to-day basis. And that's what's going to help you to become more consistent in your journey. My name is Sanjeev. I'm sure some, all, maybe a few of you are going to be familiar with my face over the last few months that we've been doing these sessions together. And everything inside of these sessions is with the premise to help you improve in some way, shape, or form. The objective of every session remains the same: to give you a mental reframe, a difference in perspective, and something that you can take away from today's session to help you to improve how you approach the markets. Even if it creates a slight mindset shift, that for me is a win, because every action starts from a thought. It comes from an idea. It comes from a mental reframe. So the moment we can plant that seed, it opens up the door for you to being able to create the change that you would like in order to achieve the outcomes that you are looking for. Now, as I do with most of these sessions, I like to curate them around things which have recently happened, specifically in my trading, but also I like to tailor them around questions, situations, scenarios that I have been posed from traders that I have the good fortune of interacting with on a very regular basis. I always like to say, and those of you that have tuned in and watched some of these sessions before, you'll know I always give a lot of credit to the fact that I have been very, very blessed with being able to connect with hundreds of traders every single month inside of communities, prop firm traders, retail traders, traders from all backgrounds. And every single conversation sheds some light on how we as human beings and how the nature of our behavior for most people is typically not wired to succeed as a trader. That has at least been my experience. It was something that I struggled with for the longest time. And so I use these sessions as a time and a place where I can share the lessons, experiences, stories, teaching points, and practical takeaway things that you guys can take on board to, again, help your approach inside of the markets. Now, today's session is actually built on a conversation I had with one of the members in a community that I work with late last week. They were expressing a little bit of frustration that they've had with the markets that week. And a lot of that was framed around the idea that a trade essentially did not go to plan and it left them frustrated with the markets. Now, naturally, as the way most things do when it comes to trading, that frustration turned into a heightened state of emotions. That emotion turned into an action, and that action turned into a detrimental outcome for their P&L. And that's obviously the thing that we are working to avoid. The one thing that you will constantly hear me refer back to throughout the entirety of not just this session, but all the sessions that I do, is really to getting everyone to open their mind to the idea that actually we have very little control over the markets. We don't control the outcomes. We can't control news. We don't know where interest rates are going with any degree of certainty. We don't know what's going to happen with tariffs. We don't know when war is going to break out. The only thing we can really control is how we manage risk on a day-to-day basis. And for you as an aspiring or already profitable trader, I like to think of us as risk managers. And so this idea of having emotions spill into our actions generally poses an issue, because it stops us from being able to make the logical, consistent, and I would say level-headed decisions that we need in order to have a certain degree of consistency in the markets. Now, the interesting thing that came from this discussion that I had with the trader late last week was that actually when we started unpacking the problem, the issue had nothing to do with the outcome. It had nothing to do with the markets, but it had absolutely everything to do with their expectations, or I would say their flawed expectations. And this is not a topic that we've actually sat down to discuss. And I thought it would make for quite a good topic today, because I truly believe that expectations are absolutely everything in this game. I have found, and again, this is both from my experiences and from the experiences of the traders that I connect with on a month-to-month basis, that you can win or lose a trade long before you hit buy or sell, right? Let me say that again. You could win or lose a trade long before you hit buy or sell. And if you haven't already worked this out, I'm not referring to just P&L. I'm referring to how you think about that position, because your ability to be consistent over time is largely connected with your ability to remain level-headed, have clarity of mind, and to be able to make those good, logical, and rational decisions that you need on a day-to-day basis. There is no point in having excellent analysis, making a winning trade, but then being on such a high after that trade that you give it all away. And on the flip side, there is no point in doing everything right, which I'm hoping most people are doing, losing that trade as a natural part of just your edge playing out over time, and then going on tilt because you're frustrated with that loss, and then giving more money back to the market in an attempt to try and win it back. So either side of this there can be a problem, but it all roots back to one thing. What was your expectation going into that trade? And this is something that I think not a lot of people start to focus on right from the very get-go. This is something that will determine how stable and how logical you're going to be able to think in the long run, past the point of just the outcome of the next trade that you're going to be in, right? So expectations and really getting them right is a really important part of consistency. And it's truly what I want to unpack today. I have always found that expectations are the single biggest root of what shapes most emotions. Most emotions go on to shape behavior. Behavior is what ultimately ends up shaping your results. So this is why I say that by the time you've clicked buy or sell, if your psychology is not in a good state or a good place, then the outcome, at least the long-term outcome in terms of your consistency, is already decided. So I think if you put some time, emphasis, and energy on focusing on getting your expectations correct, then actually your reactions can be a lot better as a result of that. I think the problem is, and what I'm alluding to here in kind of the intro to today's session, is I think most people don't put emphasis on this area. They don't actually check in with their mind to understand what is the right thing to be thinking in this situation. And therefore, their reactions always suffer as a consequence, regardless if they have a winning or a losing trade. I would actually go as far as to say the outcome is somewhat irrelevant if you haven't already sorted out the expectations in your mind before you click the button, right? So a quick reflection point that I want you guys to start thinking about is I want you to just take a moment, and I'm going to pause for maybe 15 or 20 seconds. We're going to have an awkward moment of silence here on the call. But I really want you to take a moment, and I want you to think about, what do you actually expect to happen when you hit buy or sell, right? When you've lined up a trade, when you've done all your analysis, and you've decided it's the right moment to hit buy or sell and enter the market, what are you expecting in that moment? Is it immediate follow through? Are you expecting the trade to immediately go on side? Are you expecting super clean price action between your entry and your take profit point? Are you expecting not to go into any drawdown at all? Or are you expecting a quick win, one that will wipe out the last 1, 2, 3 losses before that? Take a second, right? I'm going to give you 15, 20 seconds of just pure silence. I want you to have a second of introspection and think about what you actually expect when you hit the button. Silence is always uncomfortable, isn't it? It's crazy that just a moment of silence can make you feel so uncomfortable on the inside, but yet we work in an environment which brings such a higher degree of discomfort, but we don't give it that much thought on a day-to-day basis, right? I'm hoping everybody had a chance to kind of think through that, right? What are your expectations when you enter the trade? There are going to be people that fit on both sides of the camp with this, right? There's going to be some people that only ever envision the positive outcome. And to a certain degree, I get it, right? I understand why that thought or that expectation would exist. Because the honest truth is, and I think this should be true for everyone, if you genuinely had zero indication that the potential trade that you were going to take was going to run to target, why would you take the position? Right? There's got to be some indication, some data, some statistics, some gut feeling, however it is you make your decisions. But there's got to be something inside of you that believes that price can go from entry to target before it hits my stop loss. That's where, the positive thought would be drawn from at some point in time. There are going to be some of you that have been so molded by your experiences, and I definitely fell into this camp, especially with the way my trading journey started. But there are going to be some of you that can only ever envision getting into a trade and watching it go straight to your stop loss. I, for many, many years, lost money in the markets, and it genuinely conditioned me to only think about a negative outcome. And again, either one of those can be positive or negative, depending on the individual. The issue isn't which side of the camp you fall on or which thought you actually have. The issue is, or the question is, what reaction it actually produces in you. Because if you only ever think of the positive, what does that do for you when you have a losing trade? If you only ever think of the negative, are you going to be so elated and on a high when you have a winning trade that you end up going on tilt and giving it all back anyway, right? There's no good or bad situation out of this. It's just what actually works for you. And so this session is largely surrounded around the idea of unpacking this idea, right? We want to understand why expectations will quietly and silently control everything that happens in terms of your long-term consistency. I want to talk about the psychology behind it. I want to talk about some common traps that a lot of people fall into. And then I want to give you guys some practical takeaways, some real things that you could start thinking about to help rewire those expectations and train them so that you can think and thrive inside of a probabilistic environment. I want to preface this to say it's not easy because most of us are not wired to naturally think this way. Like I said at the very beginning of today's sessions, most human beings suck at thinking in probabilities because the world doesn't operate that way. And our natural wiring of our mind, as I'm going to explain to you guys very shortly, it doesn't really work that way, right? There's a very small subset of people that I think are naturally better trained, is maybe a good way to put it, better trained to thrive in a probabilistic environment. But it doesn't necessarily mean it's going to be the same thing for each and every single person. Okay. Hello, Jenny. I can see you've said hello in the YouTube chat. Thank you so much for tuning in today. For anyone else that is watching live, be sure to come and say hello in the chat. If you do have any questions, if you're struggling with anything, if you want to share a high, a low, whatever it is, feel free to throw it in the chat. I will try and keep an eye on it throughout the course of today's session. And I will open things up for a little bit of Q&A if there are any questions toward the end of the session in and of itself. But thank you so much for tuning in. I appreciate you being here. So going back to the topic in and of itself, the main thing that I want to start with is giving you guys a little bit of clarity around the reason why most of us fall into this trap. And I want to help you to unpack the psychology behind what most of us tend to experience. Now, something that I've talked about in a fair few of our sessions is this idea that the mind is not wired for performance. It's not here to help you to make money. It's not here to help you to operate at the absolute best of your ability. The only thing the mind is really wired to do at its very core is to help you to survive. It's a survival mechanism at its very, very core. And this is why the mind naturally wants to stay away from pain, danger, threats, discomfort, and it wants to take you towards a place of safety, comfort, pleasure, reward, all of these sorts of things, right? We are naturally moved away from pain and we are naturally gravitated towards the idea of taking rewards. Now, if we start to think about how this applies in our trading, what you have to understand, and I'm hoping most people will agree with this to a certain degree, but the markets are essentially in the short term fairly random, right? We don't know what the market is going to do on any given day. We can determine some type of probabilistic expectation based on data, based on patterns, based on some kind of fundamental analysis. We can draw a certain degree of probability to say, hey, this market might do this based on what has happened. I'm not disputing that in any way, shape, or form, but there is inherently always a degree of uncertainty in the market. And again, I'm hoping nobody here will disagree with that idea. This is why we use a stop loss, right? And again, I say that mindfully, knowing that there are some people that don't like or don't respect using their stop loss. And clearly there is a lot more work to do in that area if you fall into that kind of camp. But inherently, the markets are an uncertain place. We don't really know with any degree of certainty what's going to happen next. And the problem is that's exactly what the brain wants. The brain wants certainty and predictability. The issue here is, as we've established, trading offers probability and randomness. So we can create expectations in order to reduce our mental discomfort, but in reality, the market doesn't care about what we expect. It doesn't care about how much money we want to make. It doesn't care about our expectations, our hopes, our wishes, our desires, our dream to take a vacation or to retire your parents. It doesn't care about any of those things. The market just moves, right? The market will move in accordance with order flow, supply and demand, fundamental factors, how large institutions, banks, hedge funds are positioning for the long run. That's what's really going to drive the market. It's not retail traders like you and I with hopes, dreams, and a few $1,000s to our name to be able to plug into an account and put a position on. Doesn't care about any of those stuff. The problem is your mind is not wired to work in that environment, right? Anytime that we are faced with uncertainty or discomfort, your mind wants to move back to a place where it has a certain level of comfort and control over what we're doing. And this is ultimately what makes trading so difficult for most people, right? The fact that we are constantly running away from pain and we are constantly chasing some sense of comfort or reward, it poses an issue with how consistent we will be in the long run, right? So ultimately, the expectations that we go in with, it frames and creates the outcomes that we will get in the long run, right? The expectations that we have, and we've already established that the mind is likely to create some unhelpful ones to begin with, they will create what I like to think of as kind of like emotional contracts. Unless this happens, I'm going to be unhappy. Unless this outcome is achieved, I'm going to be disappointed. The moment you create that contract between you and something which you can't control, you're giving yourself a certain degree of inconsistency, which you're setting yourself up for in the long run, right? So you have to be able to recognize this contract which you have built and which you have put in place. Ultimately, expectations create these invisible contracts with the market. And if you never have awareness as to what expectations you have, you're ultimately going to end up frustrated when the market does something that you're not truly expecting in the long run. Okay? So that is a little bit about the natural psychology that most of us tend to fall into. We are constantly looking for certainty in an environment which it doesn't really exist. And that poses an issue for us in the long run with being able to be consistent in how we perform as a trader. Jenny says, I don't respect my stop loss. I don't place it a lot of the time. And that is why I am still losing. I'm making a difference in my Darwin. Today it was going to be created. I hate the pain of losing, as that's why I don't use a stop loss a lot of the time. Jenny, this is a really interesting perspective, but it's actually a very, very common one I tend to find. Something that maybe you should start thinking about if you haven't already. And again, this is where I like to think about the reframing and the perspective of how our mind operates on a day-to-day basis. You are actually very, very aware that you hate the pain of losing. And that's the reason why you don't use a stop loss. I would actually take that one step further. And I would say it's helpful to understand what specifically you don't like losing. Is it the attachment to money? Do you not like losing the monetary aspect of what we do in this game? Or do you not like being wrong? Do you not like the market telling you that this idea was not correct and you take that as a bad sign for what happens in the long run? Now, I want you to focus on that, because actually figuring out which camp you fall into will help you to figure out how to solve this problem. And some people don't know the difference. And often the best way that I get people to figure this out is to take 1 or 2 weeks away from live trading. and to go back and trade live market conditions, but on a demo account, right? So real-time markets, things are moving exactly the way that they normally would, but do it with no actual money on the line. If your problems disappear, then it's likely your attachment is to money. And it would indicate that probably you're risking an amount of money that you're truly not comfortable with, in which case it would probably make sense to either size down or size up, depending on what you're experiencing. If you're sizing too high, you may feel a state of anxiety. You may want to avoid taking a stop loss because you don't want to see that money disappear. For some people that fall on the other side of this camp, they may seem that they're actually risking too small of a position size. And because they don't care about the money, they don't care about using a stop loss whatsoever. So it can be on either side, right? If, however, you find that trading a demo account, you still encounter the same problems, well, then you've determined that actually money is not the delineating factor. The issue is actually my attachment to outcomes. So then I would want you to ask yourself, why is it that I am so attached to the outcome of the next trade? What do I believe this one trade is going to prove or disprove? And that's why I'm inconsistent with my approach. And that's why it causes a certain pain of losing. So two different avenues that you could explore there. But both of them unpack the same problem, which is I'm not using the stop loss because I have a pain of losing. When you get really, really clear on what pain, like what pressure point that is, the market is really pressing for you there, then actually resolving the problem can become a lot more structured and a lot simpler going forward if you have the right mindset to begin with. Okay. So I hope that helps, Jenny. And again, that's for anybody else that falls into that same camp. Like I said, there are many people that fall victim to these kind of common traps and symptoms that make us inconsistent. So I like to give a little bit of clarity and cover the kind of broad spectrum of what a lot of people are likely dealing with in that instance. Okay. Okay. So I want to transition a little bit into talking about maybe some of the most common expectation traps that I tend to come across. I definitely fell into at least one or two of these, and I'll kind of flag them as I go through them. But I have seen many of these play out time and time again, not just in myself, but in many other traders. And again, these are the most common ones. It's not a full and extensive list, but they're the most common ones which tend to trip most people up, right? Trap number one, I find, is expecting every good trade to win. This is one that I think is really, really common, and most definitely one that I was guilty of, especially a lot at the start of my journey. I truly believed that if I was doing all the right things in terms of my analysis, my routines, if I was executing in the right place, if I did all of that correctly, then I should be expecting to make money. The market should reward me for my hard work and my efforts and for doing everything right. What took me a long time to understand is that a good trade is not the same as a winning trade, right? Again, we can't control outcomes. Expecting confirmation that you're doing the right thing from something which inherently you don't have any control over, it creates this cycle of self-doubt. Because if your idea of a good performance is only correlated to the direction of your P&L, you're setting yourself up to live on this roller coaster of emotion because, again, you have no control over that outcome. So you have to be able to reframe this in your mind. You have to understand that a good trade is always defined by execution, not the results. The same way I could take a perfectly fair coin, I could flip it, I could call heads or tails, and it could land on the other side than I wanted. It doesn't mean there's something wrong with me. It doesn't mean there's anything wrong with the way I flip the coin. And it doesn't mean there's anything wrong with the coin in and of itself. It just means it was one random short-term outcome, but it is a very small data set with regards to how probability truly works over time. When you start to truly understand short-term variance, this will stop bothering you. And it's something that I didn't truly embrace at the start of my journey. Okay. Trap number two, expecting quick results. Now, this is not to pat myself on the back. I don't know why, and maybe I just got lucky. This was actually a trap that I didn't fall into that much. I expected from the very beginning, and especially with how long it took me to start having breakthroughs in this game, I expected that this was going to be a very, very long journey ahead of me, right? I find that a lot of traders, especially in today's day and age, they are expecting quick results because they've been fooled by what they see on social media. They see these these monster payouts. They see this, overnight success. I've been funded in 30 days. I've made X amount of money in this short space of time, and it creates the wrong expectation in terms of when you should see results. As a result, you consume all of that information, and then you want every trade to work out right now, right? And every time you get into a position and you've done all of the right things, you see the market start moving against you, and you see that as failure, right? It makes you want to abandon perfectly good ideas. It gives you premature exits. It makes you adjust your stops earlier than planned because the market is not giving you the quick results that you were hoping or expecting going into this. And again, the reframe and the thing that you want to take away and learn from this is that you have to expect fluctuation in the market. You have to understand that a good, healthy P&L or equity curve is not just up and to the right all of the time. Sometimes you're going to go flat. Sometimes you're going to lose money. And that's a very normal part of this game, right? An edge, at least from my exposure, they don't exist all of the time. It's perfectly normal to go through periods of just keeping your head above water, but not a lot of traders truly expect that. I think when you start to open your mind up to the idea of seeing fluctuations in your equity curve and understanding that things will look different if you just learn to zoom out, it will give you a much greater degree of clarity in the short term, which helps your consistency in the long run. Okay? Trap number 3, and this one's actually a little bit closely connected with the one that we've been talking about here, which is, the idea of expecting quick results. I find that because of this expectation of expecting quick results, a lot of people hope and expect the market to pay them based on their timeline, right? And I find this is a very, very common trap. People come into the markets and we say, right, I've got a goal or a target this week of making 100 ticks. I want to make 100 pips from this market. And it sets you up on this idea of chasing, right? When you have this imaginary target in your head of, I need to make 10% in the next 3 months, or I need to make 2% today, or you give yourself those expectations of outcomes that you ultimately can't control. It fuels this behavior, which makes you try and chase those outcomes. And again, you're putting time and energy into something which you ultimately cannot control. A lot of people will sit in that situation, and if they've been flat for the week, or they've taken maybe a losing trade to start the week, they will sit there and they'll start thinking, well, I deserve this. I've been patient. I've been doing all of the right things. I've been managing risk. I've waited long enough. I've been patient. The reality is, going back to what we said before, the market owes you nothing. It owes you absolutely nothing. The harshest reality, and again, one that I truly had to learn the hard way, I say unfortunately, but it led me to learn the lessons that I needed to get to closer to where I want to be, at least. But the market doesn't reward you the time that you've invested. Whether you've sat there for a day, a week, a month, a year, and you've tried to analyze a market, there's no guarantee of that's going to lead to anything. I actually personally find that what you work on in this game is significantly more important than how much time you necessarily put into that. Because if you don't work on the right things to begin with, you could spend all the time in the world and it's not going to make any difference, right? I could sit here, you guys, or those of you that have been tuning into these over the last few months, you guys know my niche is psychology. It's performance, it's mindset, it's everything about our habits and routines and behavior. The harsh reality that most of us have to accept is that even if I gave you the world's best monk-like mindset, if you don't have an edge, you're not going to make any money. That's the raw reality. But the opposite is also true, I find, as well. You could have the best edge on paper, but if you don't have the mindset to apply it, to think in probabilities, to regulate your emotions in the short term, you're probably going to screw it up anyway. So you have to work on the right things. And it's not just about how much time you've put into this game. Until you identify specifically what you need to work on and then put the time and energy into that, you're never really going to see any improvement. And that was a large part of my journey. I've talked about this many times. my first 6 years, I struggled to have any breakthroughs in the market. I lived in this constant cycle of jumping from one strategy to another, to another, to another. And it was all because every time I hit a bad patch, whether that was a losing week or a losing month, I presume my strategy was broken. And I was like, okay, well, if I tweak it to now fix what occurred last month, I won't have to encounter this again. And I was right. I fixed what occurred last month, but then I broke something else. Not understanding that, these moments of your strategy breaking and not making money, they're just a very normal part of the game. And that's the aspect of probabilistic thinking, which I really lacked at the start of my journey, right? Trap number 4, I've got a couple more for you. Trap number 4 is if you're someone that constantly expects winning days, right? Even if you have a very high win rate. And for me personally, and again, maybe this is a certain degree of subjectivity, but for me, a high win rate is, kind of in the 70, 80% region. If you're anything around there, in my opinion, that's a very, very high win rate. I would like to hope that nobody here is believing that it's possible to have a 100% win rate. We all know that we're going to lose at some point in time. We all understand that we have to make a choice as to whether we want to take small losses or big losses, because if you can't accept the small ones, you're going to be forced to take the big ones. That's the reality of the game that we play. But if you are expecting consistent winning days, I would say that there's probably an issue there with expectations going in, right? If you don't expect that even profitable traders have, flat or losing days, weeks, potentially even months, maybe even quarters, you're thinking about this game the wrong way. You're not truly understanding how your data probably plays out over time. I always like to give the example, and again, this is statistical. It's not based on my opinion. It's something you can go away and actually look up for yourself. But if you have a 50% win rate over a space of roughly around 500 trades, you're still likely to lose somewhere between 8 to 10 trades in a row. In a row. If you can't stomach 8 to 10 trades in a row with a 50% win rate, which in my opinion is a solid win rate, you're going to struggle, right? You're going to struggle to find consistency in the long run because your mind hasn't expected that you're not going to be winning all the time. So again, the thing to take away, the reframe that I want you guys to think about is you have to expect uneven growth, expect volatility in your returns, right? If you choose to be a trader, you have to understand that there is a certain degree of risk that comes with that. And that means to a certain degree, you are either trying to maximize your upside or you're trying to minimize your downside, right? You can outperform the market in a couple of different ways, right? You can either outperform the benchmark of what the market produces over time, or you could take a lesser drawdown on the periods where it flatlines or loses money. If you could do either of those things over a large span of time, you're likely to do very, very well. But again, not a lot of people think about it from this aspect. They think it's just going to be, constant profitable days, record months, new equity highs every single week. It doesn't always work out that way, right? Growth it's not linear. It's uneven at the best of times. And the more you can embrace that, the better it's going to be for you in the long run. The last trap, and this was one that, again, I was most definitely guilty of, and it held me back a lot at the start of my journey, was actually truly expecting, or maybe hoping, that at some point in time, you can get to a stage where emotions won't exist in your trading. Maybe, and I'm putting a big maybe on this, maybe there are some people in this world that don't have any emotion when they trade. Maybe. I personally haven't come across one. I personally think that emotions are what make the human experience so beautiful, right? The way in which we can express them, both on the highs and the lows. You can't enjoy the highs in the same way if you have never been through lows. And this is why you often see, and we're going off a little bit of a tangent here, but this is why you'll often see that people that are born into true massive amounts of wealth, they lose perspective on the world. They don't enjoy, or, they don't take for granted the things that they have because they have no perspective of anything different. If you've gone from being very, very poor or middle class to becoming very, very wealthy, it's much more likely that you're gonna enjoy and be very, very grateful for all of those experiences in a very, very different way. That's the nature of emotions. And I think it's, like I said, it's what makes the human experience so beautiful. The problem that we have as aspiring traders is most of us only see emotions as a negative thing. And I just don't believe it's the case. I truly, and again, I'm not saying I'm perfect, and I'm not saying I'm, the world's greatest in any degree, in any way, shape, or form. I always consider myself a student of the game, and I'm constantly trying to learn and improve. But I never found a clear-cut way to just flick a switch and turn off emotions. And I never found a way to do that without, it impacting my ability to express emotion in other areas of my life. The problem is, this is what most people are trying to achieve. They want to be emotional. They want to experience the highs of every other aspect of life, but they want to step up to the charts and just turn emotions off and just be robotic. I have never found that's been achievable. And actually, I thought it was just me, but the more and more successful traders that I have been fortunate enough to connect with, they all have the same idea. Successful trading is not the absence of emotion. It's being able to regulate them. And the moment you stop trying to fight emotions, and the moment you submit to the idea that emotions are always going to be there, you just have to do a better job of becoming aware of them and then changing how you react. That actually becomes a more stable path to consistency, right? So good awareness is not the absence of emotion. Good trading is not the absence of emotion. It's more so about developing a certain level of self-awareness and an ability to regulate what you are experiencing. Okay. Now, those are, like I said, 5 of what I see as some of the most common traps that many traders fall into on a day-to-day and week-by-week basis, right? Let's flip this up a little bit and let's talk about what are the right expectations. We've talked about why we have the wrong expectations. We've talked about some of the common traps that we fall into. But what are the right expectations, and how can we actually start to ingrain them into our mind so that we can naturally start thinking that way? Now, again, I want to preface what I'm about to say here is this is not an overnight fix. For many of us, we have trained and been wired from birth to think and react in a certain way. I've already talked about this idea that the human mind does not like uncertainty. Right? It is part of our survival mechanism. It makes us feel like we are at the presence of a threat or a danger if we don't know what's coming next. So all of what I'm about to share requires work. It requires some real internal work. This is stuff that you could do off the charts, but it's really going to help you to develop that probabilistic mindset. Okay. Now, the first one is I want you guys to start thinking very, very consciously about the idea that the natural human mind is constantly looking for certainty. And I want you to continually correct it to start expecting probabilities. And that could be very, very small things like before you enter your next trade, I want you to say to yourself, actually out loud, this setup, this trade, this strategy only has an edge over the next, 50 to 100 examples that I'm going to take. Actually say it to yourself, speak it to yourself like you're giving yourself that piece of advice. Remind yourself that the outcome of one means nothing. It's as meaningless as flipping a coin, calling heads, and having it land on tails. It doesn't mean heads is never going to appear again. It doesn't mean the way you flipped it was wrong. It doesn't mean that the coin is broken. In order to get the probabilities to iron out over time, you just have to keep flipping the coin. The exact same is true of your strategy. If you want probabilities to play out over time, you have to remind yourself that you have to play this out over a much large sample size, right? Excuse me. When you get good at expecting that from the very, very beginning, then actually that probabilistic nature of thinking is going to help to align your mind with understanding that I should be expecting to go through a period of drawdown. I should be expecting to go through choppy periods in the market. I should be expecting that sometimes things are just not going to work despite my best effort. This is something that I actually spent a fair amount of time talking to you guys about I believe it was maybe 2 sessions ago. I think it was session 16. No, 15. 3 sessions ago, right? Go back. If you're watching this on YouTube, go back to the live sessions that we have done here. Go back and find session 15 that we did, because we talked about, and I gave you an overall like end of year performance review. This was either session 15 or 16. Let me have a quick look at my notes here. Yeah, 2 or 3 sessions ago, right? We went through this idea, and as part of that session, we talked about the idea of actually going through flat periods. Because like I said, I try to live my journey as authentically as possible. And I talked about the idea that market conditions in the last 6 months of 2025 were not super favorable for my edge. Now, I just about came out on top, right? I didn't have any crazy returns over that last 6 months. I was just about profitable, but I wouldn't consider it, a crazy return for that period of time. But when I look back over the market conditions, I don't think I underperformed my edge. I look at the conditions and I actually understand that these are conditions where I'm going to experience some chop. I know that when things go into more stable and fluent and trending conditions, which for me as a swing trader is kind of what I'm looking for in the markets, that's where I'm going to find a certain level of, my strategy being able to thrive again in those conditions. The problem is, again, most traders are not thinking about this in terms of probability. They're looking at the outcome of one trade and they're expecting certainty from that. I couldn't care less about the outcome of one trade, right? I looked at my results to start this year, 2026, starting fresh. I finished January at a scratch. I was slightly below break even. And the first 2 weeks of February were pretty flat for me as well, right? I've had a very lackluster start to 2026. When I look at my performance, I could sit here and I could be beating myself up, but then I could also look at my trading journal and I understand I've taken a total of 12 trades for the year so far. Not a huge sample size. If we go back to the idea of what we started on here, which is our mind has to be wired for probability, I have to be telling myself that actually I can't start judging my performance until I get into looking at 50, 100, 200 trades and then see how we are performing over time, right? That's where you start to develop that probabilistic thinking, but it really requires some conscious rewiring. Your mind is naturally going to gravitate towards seeking certainty. You have to be able to consciously course correct and get yourself to focus on probability. And over time, that will start to rewire, but it's really going to take some conscious effort to begin with, okay? The second thing that I would recommend for most people, and this is one that I think is, in my opinion, not spoken about enough in this game, and that is, I want you to get very, very clear on defining what a valid loss actually looks like. What does a valid loss for your system actually look like? Now, I'll tell you why I share this one. Because at the start of my journey, I fell into a trap where the only thing that I was focused on was this idea that I need to find the perfect winning trade. I need to find the perfect entry. It needs to go on to, target in the exact same way that I would like. And this is what perfect conditions look like for my specific strategy. I never stopped to ask myself, what is a valid loss? What would need to happen in the market for me to look at the outcome of a loss and be like, meh, it's normal. I accept it. It's a perfectly normal part of my edge over time. What would need to happen for me to be able to do that? This is where defining what a valid loss can be very, very powerful, right? The moment you can stop and you can understand what conditions in the market are not good for my strategy, what would need to happen for me to consider this like an A+ setup, but it's just not going to work out on that occasion. Can you look at a single loss and ask yourself, like, was this loss actually aligned with my plan? I had actually a very interesting moment this morning. I sat down last night towards market open, and I mapped out a few ideas of what I'd be looking for in the markets today. And when I woke up this morning, I found that actually one of the markets tagged an area that I was interested in doing business in. It created some price action that I would have liked to have seen. And if I was awake last night, I would have executed on that position. Now, how that trade panned out, I would have lost money. Now, granted, I would have been able to get out with less than a 1 hour loss, but I most definitely would have lost money. So now I can look at a situation and I can say, you know what, that was a valid trade and it would have lost me money, but it's a normal part of my plan. A lot of people can't do that. A lot of people can't objectively look at a situation and say, yeah, you know what, I would have or I should have lost money in that situation. Most people will justify a reason at the time to say, this is why I wouldn't have taken this. Clearly, this, and this didn't align, and that would have spooked me out of the market. And, you know, Trump was speaking at this time, so I wouldn't have taken it. They don't have the objectivity or clarity in their plan to understand what a valid loss actually looks like. The most dangerous question I find new traders start to ask themselves at the beginning of their journey is, why did I lose? Why was I wrong? And it's not that I don't believe in learning from your losses and improving over time, but that mentality, if you're constantly looking for a lesson and trying to negate every single loss, you're moving further and further away from probability. And that's the exact opposite of the mindset that we're really trying to create here. Okay. So building the correct expectations can be really, really helped by actually getting very, very clear on what a valid loss looks like for your strategy. Okay. Tip number 3 to building correct expectations from the get-go. I always find it's very, very helpful to have a pre-trade checklist. Now, I'm going to be completely real with you guys. This is not one that I use all of the time right now, but this is something that the moment I execute a position, I jump onto my journal and I start inputting all of my data for the trade that I'm in. And part of that journal requires me to fill out my trade criteria, the reason why I'm in this position. If I've taken a trade that's outside of my plan, I'm going to become very, very aware of it in a very short space of time because of the process of how I go about doing business on a day-to-day basis. If you are someone that tends to do things outside of your plan, or you tend to have completely the wrong mindset going into this from the beginning, I think going through a pre-trade checklist can absolutely transform your results. And I say this from the perspective of like where I took this idea is hearing about pilots going through a pre-flight checklist before every journey that they take, right? Before every journey that they take, regardless of experience, regardless how many flights they've taken, regardless if it's your first day or your last day on the job, you go through a pre-flight checklist because they understand that when you've done something over and over again, it's completely possible to get complacent. They understand that if you're new to the game, it's easy to miss certain things out because you're not used to doing things in a certain way. If your mind is not operating in a way that you would like, for me, it makes sense to have this pre-trade expectation checklist where you can go through a list of criteria and make sure that your expectations are in the right place. That might be small little things. Have I defined my risk? What is my risk on this trade, right? What is a type of movement or price action that would indicate that this trade is not working in my favor and maybe that I should be bailing this before it hits my stop loss? What would actually invalidate my idea? What would need to happen in the market for this trade to become absolutely invalid, right? Or maybe it's as simple as just sitting down and asking yourself, am I at a place of equilibrium? Mentally, am I thinking in a place from a neutral perspective? I'm not overly optimistic and I'm not overly pessimistic. I'm just equally neutral about this outcome. Put those on a checklist. Whichever one you feel like you're suffering with most, put it on a checklist. And before you hit buy or sell, make it a rule of thumb that you have to go through and you have to tick these boxes off to ensure that you have gone through the right things to train your mind to start thinking in probabilities so that you can develop the right expectations in the long run, right? So I find that to be massively, massively helpful. It sounds overly simplistic, but you will be surprised as to how powerful it is to just keep that checklist in front of you before you do anything. You get those expectations in check, and I promise you, you will start to change the way that you perform in the long run. Okay. The last tip that I want to give you guys for building the correct expectations in the long run is I want you to develop an ability to zoom out. Now, I say this not because it's easy, but actually because it's very, very difficult. We as human beings, we are naturally not great long-term thinkers. We fall into this trap. There's a cognitive bias called recency bias. And recency bias is the natural human tendency for the human mind to prioritize recent experiences as opposed to what is likely to occur over time, right? So I always remind most people that if your mind is naturally wired to focus on recent outcomes, you have to consciously actually give yourself the perspective to zoom out and look at what happens over a larger sample size. So that might mean only reviewing your results weekly and monthly, not daily, right? Daily outcomes should be relatively unimportant with regard to a relevant sample size to determine how your system is working over time, right? Expect that your edge is only ever going to be present over a large sample size of trades. Expect short-term variance, right? Whether it's going to leave you in winning streaks, losing streaks, flat periods, whatever it is. If you learn to develop the mindset that expects randomness and unfavorable things from the market, you're never really going to be surprised, right? I want to share a really silly example that I use a lot. Again, it's going to sound ridiculous, but there is a lesson behind what I'm sharing here. If I had the good fortune of meeting any single one of you in person one day, right? We bumped into each other on the street and you came over and you said, "Hey, Sanj, you know, I watch your streams on Darwinex all the time. It's really nice to meet you." And instead of saying hi, I turned around and I slapped you around the face. What's your reaction going to be? I would like to believe that the impression that you guys have of me here is that I'm a fairly nice individual. That's what I would like to think anyway, right? But if the first time you met me, you came up to me and you said something really nice, and I turned around and I smacked you around the face, I would like to think that you're probably going to be shocked, horrified, disappointed, angry, frustrated, aggressive. I don't know. You're going to react in a certain way, right? So let's say that situation happens. The next day we come back. Same thing happens again. You come over, you say hi, you're very, very polite, and I smack you again. You're going to be just as shocked, but you're probably going to be a little bit less shocked as the day before, right? Let's say we start bumping into each other every single day. We both take a familiar path. Do you think after 1 week of this happening every single day, you're not going to have started to expect it, started to like dodge, slap back? I don't know, right? Like I said, the example's ridiculous. What I'm trying to get at here is to help you to understand that what was an unbelievable situation on your first day, the moment your expectations start to align and you start to expect ridiculous behavior from me, actually you're not surprised anymore. It just becomes normal. Think about what would happen if you develop that thinking for your trading. Imagine if a losing trade didn't absolutely tear you apart because you expected it, because you understood that, hey, my strategy only wins at best 45% of the time, 55, 60, 70% of the time. But that still means I'm likely to take X amount of losers in a row. And as long as I've done everything right, I should expect that sometimes I am going to lose. The moment your mindset aligns with the nature of how the market moves, which is sometimes you have to expect randomness, then you're going to stop panicking when it actually appears. And that's what leaves you in a state of calm, in a state of equilibrium, in a state of being able to make the logical and rational decisions that you need to carry you through into the long run. Okay? Last couple of things I want to share with you guys before we wrap up today's session. I want you to, if you're someone that can resonate with anything that we've talked about today, an exercise that I think is really, really powerful if this is something that you want to start improving. I'm a big advocate of the idea that you can't be what you can't see. if you want to create change in any area of your life, for me, the first step to changing anything is raising your level of self-awareness, right? You have to be aware of what the true nature of the problem is in order to be able to change something. So if there is something that I've said that you've resonated with, a false expectation, right? A trap that you're constantly falling into, I want you to get into a habit of not changing anything to begin with, but just write your expectations down before entering a trade. Right? As you go in to enter a position, write down what is going through your mind at that moment in time. What are you thinking about? What are you hoping might happen? What are you convinced won't happen? Just write these things down. Any thoughts, any emotions that come to mind, just write them down. What did I expect? And then after the trade is concluded, write down what actually happened. Over time, you will start to build data on yourself to help you to understand if you were actually reacting to price, if you're actually reacting to what you're seeing on the charts, or whether you're reacting to an expectation that you have created in your head. Because this is honestly one of the most difficult skills for most people. Learning to be present and trading what you see and not what you want to see. One of the most difficult skills you could ever adopt in the markets. And in all honesty, it's something I'm still working to get better at, right? I'm constantly looking at trades that I am in. Like I said, and I've shared many times, I'm naturally more of a swing trader. So it means I tend to hold positions for a day, maybe the better part of a week, maybe a couple of weeks sometimes, depending on how I'm trading. But there are going to be occasions where I've been in a trade for a certain period of time, and what I want to make sure is that I haven't lost subjectivity. I'm sitting there and I'm asking myself, if I wasn't already in this position, would I still want to be in it? The moment I start saying no, I have to start questioning why I'm still in the trade. It's a very simple way to shift that perspective of trading what you see versus trading what you think. Because trust me on this one, the moment you have money on the line, it's so easy to develop flawed expectations. It's so easy to start justifying certain things which outside of a trade would feel absolutely crazy. But we do crazy things when money, hopes, expectations, dreams, and desires are all on the line. And that's something that we have to become more and more aware of. The more we can start to identify our patterns of behavior, the more we can align our expectations with what our data suggests is going to be true for our trading. This is when your expectations start to become better aligned with the markets, and that's how you improve your consistency in the long run. Okay? So the overarching message that I want to share and kind of wind this session down for you guys on is I want you to understand that the market is never the cause of your frustration. If you get angry, if you go on tilt, if you feel frustrated, it's never the market's fault. It's your expectations. It means if you end up disappointed with an outcome, it means your expectations were in the wrong place to begin with. And I don't say this from a place of like, I'm on a pedestal and it doesn't happen to me. Last week, I watched a trade go from 2R in profit to stopping me out for negative 0.2R. That was painful. And the problem was it hurt me so much because at 2R in profit, I was convinced it was going the rest of the way. Imperfect as an individual, but I've developed a good process to allow me to regulate, to recognize what I did wrong, and to just keep me stable and in the game in the long run, right? And that's the exact same thing I want for each and every one of you guys. Not perfection. You're never going to get it right all of the time because we as human beings, we are imperfect in nature. But developing that heightened level of awareness, having that plan, having these methods to kind of course correct, and just truly building that probabilistic mindset where your expectations align with the short-term variance in the market, that's what's going to give you the consistency in the long run. It's not going to be perfect. It's not going to be pretty all of the time, but it will help you to achieve a certain level of consistency that you have probably never experienced before. Okay? Take from that what you will. I'm hoping that there's been something in today's session which has allowed you to think about your own journey, your own mindset, and maybe where you're going wrong. Maybe the small holes inside your plan. Maybe it's given you that little bit of a mental reframe to look at situations a little bit differently. right? Maybe it's giving you a whole structure as to this is what I need to start doing differently. And I'm hoping that's the case. But the core message of today is I want you to understand the importance of expectations as part of this game. And when you can start wiring yourself to work in alignment with the markets rather than against it, you will find that trading becomes a lot more of a fluent process. I'm not advocating they become easy. I'm not advocating that you can become this superhuman individual that doesn't express emotion at any point in time. But I am advocating that you can achieve a certain degree of peace with the markets if you start to develop the right expectations. And I say this purely from experience. I still get frustrated at sometimes, but 80% of the time, I'm good. I could take a loss, no issues. I can go through losing streaks. I can go through extended periods of drawdown. And I can trust that in the long run, my strategy will probably do okay. Okay, that is all for today's session. Thank you guys so much for tuning in today. Like I said, I hope that there was some value, some lessons, some takeaways that you guys can unpack from today's session. I appreciate anyone that is either tuning in live or watching this back on a recording. If you're sharing your time, your energy here, I always say it's our most valuable commodity. You're never going to get back more time. So I'm very, very appreciative of your time here. I wish you all a great and disciplined week ahead. And I look forward to speaking to you guys in the next session. Thank you guys so much. Take care.